After you have charged, if you are supposed to charge, you have deducted, if you are supposed to deduct, you have computed for yourself, you are supposed to compute, then you have to remit. In remitting, you must prepare what they call tax returns. That shows how much, for example, if it is what you have charged, how much VAT you have charged, how much sales you have made, how much you are supposed to pay for VAT. You prepare a schedule. There are forms which the relevant tax authorities have prepared that makes it easy for you to do. So, in remitting, while you are remitting, you are also making returns. The two of them go together. So you have compliance for payment of the tax or remitting the tax. You also have compliance for making returns. Now, returns that you make have timelines. Some returns are done monthly. For example, VAT returns are done on a monthly basis. Not later than 21st of the month, you must do your returns. PAYE for employers who have deducted PAYE from their employees, they do their returns on a monthly basis. If you have deducted tax by way of withholding tax, either from an individual or from a company, you also do the returns on a monthly, and you do your remittance also monthly. But when it comes to the income tax that you compute on yourself based on your business or based on the income you have, if you are an individual, you do that once in a year. Again, returns rendering is a compliance issue. Beyond this issue of registration, charging of tax, deducting of tax, or computing your own tax, or making returns or remittances, you also still have a compliance obligation to provide information to tax authorities. Because a lot of time when we talk about tax compliance, we do not remember that the tax authority may request a person to provide information, either regarding itself or another person. Under the law, if, for example, I am aware that Mr. A has information about Mr. B for tax purposes, under the law, I can ask Mr. B, give me the information. But if Mr. B is not available, but I know that information is with Mr. A, the law permits the tax authority to go to Mr. A and say, look, we know you have information about Mr. B. Give us that information. Under the law, it's a compliance issue. If Mr. A refuses or fails, there are penalties. And the tax authority can enforce A to provide that information. So these are basically the various compliance points. So when we talk about tax compliance, it covers all these areas. Enforcement can actually be a redundant activity, and that is what most tax authorities and FRS particularly, that's what we want. We don't want to do enforcement, because if taxpayers have complied voluntarily, then there's nothing for me to enforce. There's nothing for anybody to enforce. When I'm supposed to register, I go to the nearest tax authority to me, the tax office, or I go to the internet, because FRS now you can register by yourself on the online. And you do it, you provide all the necessary information. There's nothing to enforce because you have done the right thing. If you are supposed to charge tax, VAT for example, when you are selling or when you are providing services, and you have done it correctly, then there's nothing to enforce. Similarly, when you are supposed to remit, we know that you must make this your remittance not later than 21st day of a month, and you have done it correctly. There's nothing to enforce. However, enforcement comes in when the taxpayers or the relevant persons fail to comply with the basic requirement of the law. That is only when the tax authority now moves to enforce. Now, under the law, there are various means of enforcing the requirement of the law, tax law. For example, if you have not registered for tax as mandated, for example, under the Value Added Tax Act, there are a number of things that the tax authority can do. The tax authority can fine you, based on the law, can impose a fine. The tax authority can lock up the business for failing to register for VAT under the law. It's an enforcement tool. A taxpayer who is dealing in goods or service who is mandated to charge VAT, if he fails to charge VAT, for example, the tax authority can enforce that. Again, it can do it by way of imposing penalties. It can do it by way of doing what we call administrative assessment. Some people call it best of judgment assessment, to say, look, we can estimate how much VAT you ought to have charged, which you have not charged, and then impose it on the taxpayer with penalties, can also impose penalties, can impose interest. It's all part of enforcement tools. All of those enforcement tools do not require any going to court or whatever, because they are already in the law. We call them administrative enforcement. Then, if all of those ones do not work, the tax authority then have a whole number of other tools based on the law. It can impose what we call a lien of the properties of the taxpayer. To say, look, you are supposed to pay X amount of money as taxes, which you have not done, and then we know you have property, and property includes money you have in your bank, includes your cars on the road, includes your building. So under the law, the tax authority can impose a lien, can place a lien on the asset identified of the taxpayer, with the aim of either within a period of time giving the taxpayer opportunity to come and pay, and so that he can get back his property. Otherwise, the property may be sold to defray the tax liability that is on. So that's one way. Another way that tax could be enforced, payment, where there is a liability that has been established, can be enforced, is by way of locking up a business. And business people, nobody wants his business disrupted. So under the law, the tax authority may lock up a business and say, look, until you pay or you comply with the law, then you are not going to open this business. So that's an enforcement tool also that is available. That's what we call substitution. It's an enforcement tool which the tax authority may use. And what does substitution, how does it work? If Mr. A is owing tax liability and refuses to pay, but we know that Mr. B is also owing Mr. A. So under the law, the tax authority can approach Mr. B and say, Mr. B, we know you are owing Mr. A, but Mr. A is owing this amount of tax. So don't pay that money you are owing to. First of all, pay the tax. If there's anything left, pay to him. That is what we call substitution under the law. So in which case, we'll pursue Mr. B, who has the property of Mr. A, to pay the tax liability of Mr. A under the law. That also is part of the enforcement tools.